Hello, good morning. You're watching Power Breakfast on CNBC TV 18 in the Mumbai News Centre. I am Anisha Jain and with me is Nigel D'Souza. Well, Nigel, good morning. And it is a good morning because it is the end of the earnings season. There were quite a few last night, right from Grasim, Vodafone Idea to a lot of infrastructure companies. But we are through with all of that, at least for a quarter.
That's right, Anisha. Good morning. It's good news that, in fact, to see that earnings season behind us. It's not been the greatest one, actually, but fine. We're done with the earnings season. And also the bottom of the screen, that's looking quite nice. Another small petrol price cut. We've been seeing this on a day-to-day basis. On a personal front, that's good news. And from the market front as well, if you have crude oil prices holding at around $66 per barrel, that'll be good news. Yesterday, suddenly we had a spurt of around 1% to around 1.5%. So crude, that takes center stage as always. Let's see where we go from here. Global markets. First up, quick check on the Asian markets. Most of those markets are trading mixed despite an improvement in market risk sentiment after key breakthrough between the UK as well as the European Union. That's with regard to the Brexit deal. The Nikkei is down close to on 0.3%. So that's opened up a tad bit on the back foot. Remember, besides what's going on in the globe, the currency space is most important out there. So you have some strength on the yen. Not great news for the Japanese markets. The Kospi had opened up in the green. Now that's come off the top of the day. It's trading more or less flattish with a bit of a negative bias. And the first tick on the Straits as well was in the red. So fair to say we have more red than green to kickstart trade today. And in fact, I think the Taiwanese index, that's the one that's opened up with a gain of around 0.5% approximately. What does the SGX Nifty suggest though? We came off the high point of the day yesterday, but today it's indicating maybe some green to kickstart trade, keeping in mind that crude oil prices, they're more or less flattish overnight.
Okay, and all of this in the Asian markets, they are trading mixed because the US markets ended lower. The Dow was down 200 points. Remember, it was once up around 200 points, so it came off around 400 points off the day's high. While swings continue in the US market, the Nasdaq as well was lower by 1%, whereas then S&P 500 ended with cut of over 0.7%. Remember, S&P has been seeing cuts for consecutive 5 sessions. And in fact, it was Apple that really was down about and trade. It was down about 3%. It entered the bear market territory for some time, and that one pulled the tech index lower. CNBC's Frank Holland gets us a wrap of all that transpired on the Wall Street yesterday.
U.S. stocks sliding lower today. The Dow off by 205 points, the S&P down 20, and the Nasdaq lower by 64. U.S. consumer prices posting their largest increase in 9 months in October. The rise boosted by inflation pressures, partly stemming from the lowest unemployment rate in 49 years, and the annual wage growth posting its largest increase in 9.5. Meanwhile, utility company PG&E tumbling another 22% today after telling investors that if the company's equipment is found to have started the campfire raging in Northern California, then the cost of that damage would exceed its insurance coverage. Shares are down nearly 50% on the week. The projected cost of damage caused by the campfire is already at $15 billion. And Apple falling into bear market territory as the decline from its recent all-time high now totals more than 20%. Shares off the record they hit on October 3rd. Apple's market cap has dropped to $886 billion. It was over the $1 trillion level when the stock was trading at those October highs. And that's the action from the U.S. market. Back to you in Mumbai.
Okay, all right. In fact, the U.S. Fed Chair Jerome Powell expressed confidence in the United States' economic strength and said that the markets will have to get used to the idea that the central bank could raise interest rates at any time starting in 2019.
We kept them low, as you mentioned, for quite a long time to give the economy every chance to breathe and to recover, regain health. 3 years ago, we reached the view on the committee that it was time to start gradually moving rates back up to a level that is normal for a healthier economy. And I think I'm very happy about the state of the economy now. And I think part of that is that we have moved along. Our policy is part of the reason why the economy is in such a good place right now. We have 3.7% unemployment. The economy is growing at 3%. Inflation's right on target. And there's pretty good reason to think that we're going to continue, in a positive vein like that.
Okay, so that's the Fed Chair Jerome Powell being positive and optimistic about the U.S. economy and saying that they can see more rate hikes in 2019. But on that note, hear out what Edward Morse of Citi had to say about the U.S. market amid high crude prices and global tensions.
I think the major factor in this sell-off has been psychological. It's a bearish sentiment that set in. The market had been overextended. It was very long. We were at the time that Brent was hitting $86+ a barrel. We had the longest ratio between longs and shorts in the history of the market. So that was bound to sell off. And now we've gone to a very short position based on a whole bunch of bearish news. I don't think it's risk on, risk off with equities. I think the commodity markets and oil in particular are acting on its own. And I think it's in for a bounce.
Okay, all right. Then turning our attention to the European markets, most of those markets, they ended in the red yesterday. In fact, we had the CAC that was down close to around 0.5% approximately. Investors out there, they were focusing on the breakthrough between the UK cabinet and the European Union over the Brexit deal. The pound, however, that rose on news of the divided UK cabinet backing Theresa May's Brexit plan. In fact, let's listen in to what the Prime Minister had to say.
There will be difficult days ahead. This is a decision which will come under intense scrutiny, and that is entirely as it should be and entirely understandable. But the choice was this deal, which enables us to take back control and to build a brighter future for our country, or going back to square one, with more division, more uncertainty, and a failure to deliver on the referendum.
Okay, on that note, hear out what Stephen Parker of JP Morgan had to say about the market sentiment around Brexit.
Clearly, there's going to be an impact on global markets. I don't know that we're going to see that in the near term. I mean, this is step one in a multi-step process, and based on the lack of reaction that we saw in markets over the, post the news of a deal in construct, I think that tells you that investors are still skeptical and want to see this actually get through the cabinet, get through Parliament. If that happens, I think that's clearly a positive, not because it necessarily changes the fundamental course for the UK and Europe, but it removes a big uncertainty. And I think investors have been very skittish, particularly around Europe and the UK. Removing that prospect of a hard Brexit, if we get there, will be a clear positive.
Well, in the currency space, the euro and the pound, they rose yesterday after the UK cabinet backed Theresa May's Brexit plan. The dollar index, in fact, that is more or less flattish overnight. It softened from the highs that we saw earlier this week of around 97.5. The dollar yen, though, that has shown some weakness from the highs of yesterday.
Okay, let's take a look what's happening in the world of commodities, because crude is lower in early trade after settling with a gain of over 1% overnight. Now, OPEC and allied producers expected to cut the output in December meeting. Currently, Brent holding above the $66 per barrel mark. In fact, on that note, let's hear out what OPEC Secretary General Mohammed Barkindo has to say about the volatility that we have seen in the crude prices of late.
The price volatility, in our opinion, is being driven by the heightened anxiety, the heightened uncertainties in the market being introduced from outside the parameters of the oil market, the geopolitics of the time, the uncertainties that are being driven by these geopolitics, by decisions taken outside the industry itself but impacting on us, which the financial institutions, the key financial players are also taking cue from and taking positions. Our relationship, including the Saudi-Russian relationship, is as strong as the Rock of Gibraltar. I can assure you of that. And we had a consensus at the JMMC meeting that we will do collectively all it takes to protect and guarantee the stability that had taken us nearly 4 years to achieve. And going forward, we will not allow this relative stability to wither away.
Let's also listen in to some opinion coming in from Jeffrey Curry of Goldman Sachs on the volatility we have seen in crude prices.
Oil was initially about demand concerns. I think those are overblown. I think most people would agree with that point. The real concern is about supply. Those are real. We've seen a bigger than expected rise out of Iran. Libya is delivering better than expected, and so is the U.S. This put together is about 1 million barrel per day extra oil, which is why OPEC's talking of a production cut. Then we had the White House chime in yesterday, and there's a lot of uncertainty about that. It does not justify a 20% pullback in oil prices, which really comes into the positioning story.
Welcome back. You're watching Power Breakfast on CNBC TV 18. Now, the NBFC issues will impact growth in India. That's the word that's coming in from Christopher Wood, global equity strategist at CLSA. Here's a snippet of that exclusive conversation he had with Latha Venkatesh on the liquidity crunch in the NBFC sector and also other macro factors affecting the Indian markets.
I've always had exposure to this sector ever since I began this portfolio in 2002. But clearly, in terms of the recent past, there's been a massive hit to these stocks because of the unfortunate default of a AAA credit, which if a AAA credit suddenly defaults, you can understand this is a shock to the system. And this clearly is going to cause a significant slowdown in growth in this area. And clearly creates the risk that investors no longer trust Indian credit ratings. So that's all very unfortunate, but that's already hit the market. So in my view, in the long run, I definitely still want to own this area because I think both in consumer finance and housing finance are long-term growth stories. And my view is that the very dramatic sell-off you saw in these stocks has probably discounted the undoubted slowdown that is now coming. But from a point of view of my own portfolio, it's unfortunate because my portfolio was outperforming the benchmark quite decently until it went completely the other way because of this specific development. In terms of the ricochets from this development, obviously we had a massive outflow out of the bond funds in September as investors panicked on what happened, but it's actually reassuring to see some inflows in the month of October. But to me, this is an area we just need to monitor, but long term, I definitely want to continue to own affordable housing plays because I think the affordable housing policy, well, I know the affordable housing policy is kicking in. We're getting growing completions of affordable housing units. I also remain of the view that the Indian real estate market's in early stage of recovery.
Okay, well, just a word on the fixed income space in India as well. Like we saw foreign investors moving out of Indian equities, they moved out of Indian debt in even more emphatic quantities. But in the past week, we have seen them come back more clearly into Indian debt, government debt, basically, sovereign debt. Do you think rupee is stable enough and yields have fallen enough for for government debt to become attractive?
Yeah, my basic view, what I've been telling foreign investors for a long time, that if you can get 8% yield on an India 10-year government bond, local currency bond, in my view, that's good value. So anything of 8% or higher, I think, is attractive. In my view, the monetary policy in India in recent years has been quite tight, if not very tight. If you look at interest rates relative to headline inflation, you have high real interest rates. And in the long run, that should be government bond market bullish. So I'm not surprised to see evidence that foreigners are beginning to come back. To me, the risk on the currency is simply two externalities, which is really outside the Indian government's control.
How do you look at this repeated downgrading of Indian earnings? This is the 6th year in a row, Mahesh has pointed out, that earnings are not firing as promised. Does that make India slightly less attractive?
No, well, what's amazing, because you're absolutely right to highlight that the performance of corporate earnings has underperformed the performance of nominal GDP in India. So nominal GDP has been much better than corporate earnings. As a result, corporate earnings, I'm sure Mahesh highlighted this point, corporate earnings have gone to an almost historic low relative to GDP. But I'm kind of looking at this from the contrarian standpoint of how much worse can it get. So actually, the amazing thing is how resilient the Indian stock market has been during all these years of earnings disappointments. But next year, I'm hoping, or not hoping, My base case next year is we will finally see evidence of the long-awaited capital spending cycle in India, and that should be the catalyst for better earnings. So my base case is to increase my overweight. Right now, I'll be looking to increase my overweight in India early next year. If I get more confident that the capex cycle is returning, and if my base case, if I continue to believe my base case on the politics, and my base case on the politics is that the Modi government will be re-elected, albeit with a reduced majority.
Okay, so that's Chris Wood of CLS saying that they might increase the overweight on India next year. But back home on Dalal Street, it was a volatile day of trade, which saw the benchmark indices end absolutely flat. Now, the Nifty ended the day with a slight negative bias, but managed to hold on to the 10,500 mark. The Sensex and the mid-cap index too ended flat with a tad bit of negative bias. Nifty Bank, however, was the star performer in yesterday's trading session, with that index outperforming its peers to end over 0.5% higher. But that was about yesterday. Yes, it was a volatile session in the Indian markets. There was another volatile session when it comes to the US markets as well. So let's see how today pans out. And we have Ekta Batra joining us to tell us how the market cues are stacked up. Ekta, good morning. Over to you.
Thanks, Anisha. So, like you mentioned, the markets yesterday gave up gains in the second half. You know, the Bank Nifty outperformed, and we had lower crude that failed to sustain the kind of momentum that our markets had seen initially. But FIIs net bought 277 crores, so there has been some amount of a sporadic buy which has been coming in from the FIIs in the past couple of sessions. DIIs net sold 272 odd crores. Now, in terms of the rupee bond market, it was quite positive in terms of lower crude. So, the rupee ended at 72.3 versus Tuesday's close of 72.67, and the bond yield ended at 7.74%. Now, in terms of what we can expect today, the big factor that we've been watching out for is definitely crude prices. So, with regards to crude prices, we're currently hovering between that $65–66 per range. So, there has been no sort of dramatic fall beyond that level. The US markets ended lower, but that doesn't seem to be that much of a concern for us anymore, because we seem to be swinging through the tunes predominantly in terms of at least what's happening with Brent crude prices. We might not be gaining strength to strength, but the resilience compared to the global markets could be brought on because of the stronger incremental macros that we could see. So Asia is a bit mixed, and SGX is currently indicating that maybe it could be a little bit of a positive start. It is also Bank Nifty options expiry, and also earnings season is ending for Q2 FY19, so I'm sure everybody can share my enthusiasm there. A lot of result reactions. We have Grasim, Thermax, Vodafone Idea, Apollo Hospital, Suzlon, Future Retail. A couple of stocks to watch out for. Nifty levels to watch totally. Support would be probably looked at 10,440, 450 on the downside. Those are levels that we've tested intraday in the past couple of sessions. Recent high has been 10,651. That was yesterday's intraday high. So whether we can surpass that, next level to watch would be the 200-day moving average at 10,759.
All right, Ekta, yeah, definitely great news. On a personal note, that's the end of earnings season. It'll be peaceful evenings from now on. But tell us, what are the stocks you're looking at?
Well, yes, lot of stocks to watch out for. So I'll start with Grasim, and maybe, Nigel can provide more color. Net loss of around 1186 crores versus a profit. Thermax, net profit 75 crores versus our poll of 68 crores. So that was better than expectations. Apollo Hospital, good numbers. Companies also approved demerger of their retail pharmacy business. Vodafone Idea, loss of 4,974 crores. There was an exceptional, but really that loss would have still continued. Coffee Day, net profit down 54.7%. They're going to segregate their coffee and non-coffee business as well. Future Retail, profit 175 crores, which is in line with our estimates. PNC Infratech, profit of 35 crores versus our poll of 43 crores, so that missed. Suzlon, which turned into a loss of over 600 crores versus a profit year-on-year. And other results include RPP Infra, UBL, NHPC approved a buyback, and Yes Bank, Ashok Chawla has resigned as the chairman of Yes Bank, so that stock would be in focus as well.
Okay, Ekta, thank you so much for that. But moving to corporate action, Ashok Leyland delivered a weaker than expected Q2. Also, the MD and CEO Vinod Dasari resigned, citing personal reasons. We spoke to Gopal Mahadevan, CFO of Ashok Leyland. Listen into what he had to say about the succession plan and also the company's growth outlook going forward.
You know, in 2021, we have the implementation of BS6. And traditionally, whenever BS6 has been implemented anywhere, I mean, Euro 6 or BS6 has been implemented, there is quite a bit of pre-buy that happens in the previous years. We do expect a certain amount of pre-buy to happen in the next year. Hopefully, if there's a lot of certainty on other fronts, you know, on the microeconomic, political fronts, I would say that the industry should grow at 20 to 30%, but we'll have to wait and watch. But certainly, we expect a pre-buy to happen, and that's how we are planning our overall operations. I think the demand growth would primarily be triggered by infrastructure spend. So I think that is continuing, and that's one of the reasons where you're seeing that, you know, other than a slight dip in tractor trailers, almost all other segments of, you know, trucks and commercial vehicles are growing. So if the infrastructure spend were to continue, we would see, you know, a certain amount of growth. But what that number is going to be is very difficult to estimate at this point in time, because we must remember that Q3 and Q4 of last year were very high growth quarters. So what would be the growth rate? Would it outgrow? Would it be flattish? Is something that we'll have to wait and watch. I think, you know, we have our strategies and tasks very clearly cut out, and Mr. Dasari had been working with the senior leadership team and will continue to do so till March 31st. And we also have, you know, Mr. Dheeraj also playing a more active role. You know, we have an extremely capable leadership team, which is pretty broad-based. The decision-making is very broad-based. So, you know, the organization is pretty large. So we don't see anything, you know, that is going to hamper the growth or the strategy or the rollout of the strategy. I think all of that is very, very clearly laid out, and we know what we need to do as we go forward.
Okay, time to slip into a short break now. But on the other side, catch Shireen Bhan in an exclusive conversation with UIDAI CEO Ajay Bhushan Pandey on the Aadhaar debate. Stay with us.
Straight on to the big interview then. 2 months after the Supreme Court upheld the constitutional validity of Aadhaar and curtailed its use, UIDAI CEO Ajay Bhushan Pandey has cleared the air on the impact of the verdict. Now here are the key highlights. Fintech companies and third parties can use offline Aadhaar authentication to verify users. Pandey said that the Attorney General has opined that such a move is not in contravention of the order. Take a look at that conversation.
The Supreme Court has clearly said in this judgment that Aadhaar authentication, if Aadhaar authentication where, you know, you put your biometric or you do through your online OTP, you know, one-time password PIN which comes onto your mobile number, if you are verifying the identity through such means, we call it an authentication. So if you are doing through authentication, then there has to be some law. Some law has to be there.
Yeah.
The Supreme Court has also said that however the individual is at the liberty to use his physical Aadhaar card, physical Aadhaar card, you know, because everyone has been given an Aadhaar card.
Yeah.
Now just imagine that in our country of 130 crore people, what we estimate is that approximately 50 to 60 crore people will only have an Aadhaar card. No other ID document which can be recognized nationally.
Okay.
Right.
Yeah.
For example, supposing a laborer from West Bengal, if he comes to Delhi, and Delhi, you know, he can't get any service on the basis of his ration card of West Bengal. But what his Aadhaar card which he got in West Bengal, he can get all the services there.
Sure.
So what the Supreme Court has done, Supreme Court has permitted voluntary use of Aadhaar card as such. So what is the offline verification is an electronic version of physical Aadhaar card.
Okay.
So e-Aadhaar is an electronic Aadhaar.
Yeah.
An electronic Aadhaar can be offline verified. Offline, when I'm saying is that it can be electronically verified, but without pinging the Aadhaar servers.
Okay.
So what happens is, supposing, you know, if you take your electronic Aadhaar, go to a bank. Banks should be able to verify the digital signature of that electronic Aadhaar. Should be able to provide you the service.
Okay.
Because, you know, you have volunteered to use your electronic Aadhaar, which is permissible as per the judgment of the Supreme Court.
And you have had this legally vetted?
That's correct.
You've got the Attorney General's opinion on whether this is in compliance with the Supreme Court judgment, and it is.
Exactly, yes.
Okay. So, is this the way out, so to speak, then, as far as third-party providers are concerned, fintech companies are concerned? How many people have started this process of using this offline authentication?
So we had a workshop of all fintech companies, because see, ultimately, the Aadhaar is a very, very powerful, and Supreme Court also has mentioned that it's an empowerment document. As a citizen, as a resident, if I have an Aadhaar card or electronic Aadhaar, it is my free will to use it wherever I want. Nobody can make it mandatory until there is a law. However, I should be able to use it, and particularly when 50 to 60 crore people in India only have Aadhaar card, right? So they should be able to freely use it. So what we are doing is we are working with the various stakeholders, the fintech companies, because we don't want that India's digital journey or in this journey should get hampered. And it should so what the Supreme Court ordered, that's why we are saying is
the Supreme Court order also told you to put more checks and balances in place, to put more safeguards in place. Since the order, since you were talking about this workshop that you've done with fintech companies, what are the further safeguards that you've put in place?
So in this safeguard, let me explain to you this offline verification, how it will work. This offline verification, in this offline verification, you can go to our website and you can download one version of Aadhaar card, where your Aadhaar number will be masked. So your Aadhaar number is not exposed. Right? It has only your name, address, and photographs. Which anyway, in this today's world, your name, address, and photograph it is in the voter ID card, voter list. So the privacy issues are not to that extent, there. So if that kind of an Aadhaar card, and it is digitally signed by us, so that can be used by the fintech company, the technology company, any service provider, right, without impinging your privacy, and that itself is a very, very big safeguard. So what this offline verification, in fact, the Justice Sri Krishna committee was constituted for the overall data protection. That Justice Sri Krishna's committee also, recommended that this offline verification, virtual ID, these are the certain methods which will ultimately strengthen the data privacy, the data protection, and will protect the privacy of Aadhaar, and also will prevent misuse of Aadhaar. The Supreme Court in its judgment has, in fact, impressed upon the government to implement Justice Sri Krishna's report.
These motorcycles are our passport to the world. That's the word that's coming in from Royal Enfield CEO Siddharth Lal. He told CNBC TV18 at the launch of the company's eagerly awaited 650cc motorcycle, that's the Continental GT and the Interceptor. The launch of the twins marks the company's foray into the over 500cc segment, along with another first in its current portfolio, a twin-cylinder engine. Let's hear out what Mr. Lal told CNBC TV18's Parishad Glutra about the company's hopes from the twin motorcycles in India as well as abroad.
The twins are home in lovely Goa. We've just had a gorgeous sunset, and this is where it's all at. India is obviously our home market. That's where we have enormous brand swell, distribution. All of that's working really well for us, and this is our home market. And these motorcycles, as we speak, are there in 120 stores today. So while we did our global launch in California because, the Interceptor was famous in the 60s in California. The truth is, the availability is first in India. So the bikes in showrooms are in showrooms in a lot of the big cities already today. You'll be test riding them in a week from now. So yeah, that's the India story.
I remember I was watching your videos November 2017 right here in Goa. You were very excited while unveiling this bike, taking off the cover. How does it feel today? And also tell our viewers who are watching this today, the concept, the strategy behind launching this model. The idea goes back to 1960, and interestingly, the journey began from California.
Yeah, that's where the journey began from California, because in the 60s, the Interceptor was the big motorcycle. In those days, they were 1,000, 1,500 cc's. 750 Interceptor was the big motorcycle. It went to California, and the Americans love big things. And this was the big motorcycle. It was this big twin cylinder. And it did so well. And you know how the 60s were, apparently. I wasn't around, but there's this whole surf culture, this hippie culture, and these just fit right in. These were the motorcycles. And that's what we were inspired by. We said we want to create that idea, that concept that people really loved. But we want to bring it, obviously, in the 21st century, right? And that was what we did with these motorcycles. They're absolutely modern in their underpinnings. They're absolutely modern. They're going to meet your BS6, Euro 6, all those norms. They're going to meet all that. They're fuel injected, they've got ABS, they've got disc brakes, they've got everything that you need to run a bike in a modern time, and they have sublime throttle response. That's really the big thing about these motorcycles. They're just absolutely like butter to ride, right? But But that's what the idea was. The idea was to bring old school, charming motorcycles, which are extremely modern in their underpinnings, but they behave in a manner that's great for everyday riding.
You want to make this available for everyone. Let's give our viewers a broader view of this, and let's come straight to the pricing. Highly competitive pricing. Why don't you tell us about the pricing strategy?
Yeah, so for us, when we look at the market in India, the market for above 500cc motorcycles is what, 10, 12,000. The prices are 5, 6 lakhs to 10, 12, 15 lakhs. But it's not just the prices. When we talk to consumers, they're like, the spare parts prices are crazy. They're just absolutely nuts because they're being imported or whatever it is. Then the fuel efficiency is crap. Then there's no service available for these bikes. So we have 860 dealers who are going to be selling these motorcycles. And what we want to do is make really accessible motorcycles so that we don't want a part of that 15,000 market. We want to grow that 50,000 market to 150,000, to 300,000, to 500,000. That's what we want to do in India. We have, I don't know if you realize, we have 3.5 million Royal Enfield customers in India since we launched the Classic, right? And those guys, a lot of them have been saying, guys, what do you have? You saw online what people have to say. They're like, okay, we've written this for a while, what do you have? So we've got this model, this very model, the Interceptor 650, which is a global product. The same product comes to India, goes every single market in the world, no exception. Exactly the same specification, exactly the same parts. This Orange Crush monogrammed model is going to cost you ex-showroom 2,50,000, right? And that's something we've done basically to give our people access.
Okay, so new bike for the bike lovers, but Nigel, at 2,50,000, not a lot of people could afford that, I guess.
I'm telling you, for a bike lover, we have been waiting for this for very, very long. I remember Royal Enfield had come out with the 500cc Machismo and the other Royal Enfield bikes as well. If I briefly remember, they had come out with the 535cc a few years ago. I can't remember the name of that bike, but it was just, a very brief period where they sold 535cc, a 650cc from Royal Enfield on Indian roads, coming at around 2.7 lakh. I think I have to give a thought to that one, and I think a lot of bike lovers out there, because 650cc, that's going to be an absolute beauty. I would like the handle to be a little higher and more flattish, but that you can alter, I'm sure. Otherwise, this looks very, very interesting. Next 7 days, I'm going to the showroom for sure. I don't know about the stock and all, but I'm going to go and test this bike 125%.
Well, I can definitely see the excitement on your face, and that's really infectious. So maybe I'll also just go around and just see how does the bike look like. Well, Vodafone Idea came out with its earnings for the first time as a consolidated entity yesterday, and the result was actually much weaker than what the market had expected, and they also have some capital raising plan. Rima is here with the key highlights of the numbers. Rima, good morning. Tell us more.
Hi, good morning. Yes, first time as a consolidated entity. Now, since the merger got consummated only on the 31st of August, this quarter's numbers include 3 months of Idea standalone and 1 month of Vodafone, which means only the month of September had the Vodafone Idea combined. And the numbers are much weaker than what the street was anticipating, as you pointed out. The revenues have come in at 7,600 crore. The EBITDA margin has dropped to 6%. And compare that to a Bharti's India mobile business, which had margins of 21%, or Jio, which had margins of about 38.5%. Also, the company has reported a massive loss of nearly 5,000 crore rupees. It includes an exceptional loss of about 410 crore post-tax, but even then, this is much higher than the 2,700 crore loss that we were anticipating. Also, if you look at the numbers, the EBITDA trajectory has deteriorated very sharply. The company has also given a pro forma analysis of Idea Vodafone for 3 months. That had suggested the margins would be at 8.1%. But if you actually look at the reported margins, they've come in at 6%, which means in the 3 months, the margins of the combined entity have deteriorated very sharply. Even the average revenue per user for Vodafone Idea is at 88 rupees versus about 101 rupees for Bharti. The debt is a big problem. So their gross debt is 1.2 lakh crores. Their net debt is at 1.1 lakh crore. The company's announced a cash fundraising to the tune of 25,000 crore rupees, or $3.5 billion. How will they do that? Vodafone will contribute about $1.5 billion. The Aditya Birla Group will contribute $1 billion, which means about $2.5 billion will come in from the promoters, and the remaining $1 billion, the company will tap the markets and do it via QIP rights issue or preferential shares. They're also exploring the monetization expansion of their fiber network, which gives them some visibility. So net-net, very weak numbers, margins at 6%, a loss of 5,000 crore rupees, only mitigated to some extent by the fundraising plans that the company has announced. And that, Nigel, I guess would put pressure perhaps on Grasim as well.
That's right, Rima. So good news for Vodafone Idea, but not great news for Grasim at all, because this was the big fear, whether or not, Grasim, the good money will have to go and go ahead and, in fact, put some money into Vodafone Idea. Just take a look at the chart. In the last 12 months, it seemed that the street was sensing something, because the stock is down close to around 27% from the recent peak. I think it's roughly around 30%. You have seen the FPIs, the holding in the company has reduced from around 28% to around 23.5%. And the holding company discount, that had moved to around 60-65% as well as one point of time. Let's just run you through what happened overnight. The results came in. Everyone thought, let's focus on the results. VSF business, chemicals business, both those numbers look very, very strong. But as I said, the stock has seen some selling pressure. So there had to be a bit of a googly that was likely to come out. Now, as Rima said, Vodafone Idea, their statement says that 25,000 crores is going to be the total money that's going to be coming in to support, Vodafone Idea. Importantly, Grasim holds roughly around 11.5% stake in Vodafone Idea. Now, if you're looking at Grasim, how do the numbers stack up? One is that, in fact, they have a cash balance of around 1,000 crores. So you'll see they have some cash, they can deploy that. But they've indicated they have a 7,500 crore capex for the next couple of years, both for their VSF business as well as for the chemicals business. So most of the cash flow that they'll be generating will be going towards deploying for this capex. In addition to that, if you're talking about 25,000 crores and Grasim, being part of that, 11.5% is what they hold in Vodafone Idea, then roughly around 2,000 to around 3,000 crores is going to be deployed from Grasim itself. That's the fear that the street was looking at, and that's the fear that's likely to play out as well. Deutsche Bank, they're saying that this was the overhang on the stock now going ahead. So now they're factoring in a 50% holding company discount. Earlier, they were factoring in a 40% discount, and that's why their target price falls by around 14% to around 1,250 rupees from around 1,450. Some part of the bad news has been factored in. Overhang on the stock should open up in the red.
Okay, so keep an eye out on Grasim, might open up in the red given the capex plan for the company. But in a major development at Yes Bank board, Ashok Chawla has resigned as the non-executive independent part-time chairman of Yes Bank with immediate effect. Ritu Singh, who broke the story earlier, joins us now. Ritu, tell us, what are you picking up, and another big exit perhaps coming in for Yes Bank?
Well, we spoke to our sources in Yes Bank, and what we've been able to gather is this, that Ashok Chawla's resignation as part-time chairman of the board of Yes Bank has come because of a fallout of his name being dragged into the CBI charge sheet in the Aircel Maxis case. Now, we do understand from sources that at least 2 letters were written to Yes Bank, and the last one was written by a Supreme Court activist lawyer alleging charges of corruption against Ashok Chawla. Following this, we understand that the board had directed, the investigation as well as the, action thereafter to the NRC, that is the Nomination and Remuneration Committee of the bank. The NRC on the 24th of October then, employed both internal as well as external legal experts to understand, the allegations as well as to determine the fit and proper criteria when it comes to Ashok Chawla, given that these allegations had been leveled against him. We do understand that the board was advised and the NRC had come to the conclusion that perhaps in the current scenario it might be in the best interest of everyone if Ashok Chawla was to detach himself from Yes Bank pending investigation charges. We also understand that Yes Bank had informally sounded out RBI on the entire matter and sought their advice, and thereafter last week it had also written formally to the Reserve Bank of India on the matter. Although the RBI is yet to formally respond to Yes Bank in the light of these developments, and after an NRC meeting held, just very recently, Ashok Chawla, we understand, tendered his resignation as the chairman of Yes Bank.
Okay, thanks so much for that, Ritu. Well, on to a CNBC TV exclusive. As we count down to the RBI's crucial board meeting on the 19th of November, sources tell us that the centre is seeking resolution to some key issues at the meeting. Sapna Das filed this report earlier on the issues in focus and whether there are any signs of a resolution on some of these issues.
Well, probably signs of a resolution coming through in the next RBI board meet are becoming more visible, more clear. The expectation in the policy circles at least is the fact that some midway will be found in the RBI board meet slated for Monday. Having said that, two critical issues at the government's end, liquidity and credit. Enough has been spoken about the credit issue in terms of what may be done in terms of the Basel III norms, making it more globally aligned. Also looking at the PCA framework, the additional norms that have been attached to the PCA framework as far as the Indian banks are concerned. And moving on to the liquidity issue, basically just making sure that it's not just about liquidity there in the NBFC sector, but also the segmental issues regarding the housing finance companies. They should be looked into. There should not be a kind of a credit freeze or kind of a, a lending freeze kind of a situation, because you have 11 of the big public sector banks still under the PCA framework. All these are the concerns being put forward by the government, and they are hoping for some immediate relief. That resolution or some midway being found in the RBI board meet on Monday. Apart from this, also the ongoing issue of the economic capital framework, well, there the discussions, of course, as previously, will continue on that front. Probably not an immediate requirement or an immediate priority area for the government, so to speak.
Let's turn the spotlight on the commodity space. Manisha Gupta joins us as always to tell us what's going on there. Hey Manisha, good morning.
Morning, Nigel. Thank you so much for that. Well, we have seen the crude oil prices continue to be under pressure. Yesterday was a spike up as we heard the OPEC statement saying that they are going to looking at cutting 1.4 million barrels from the current production. Also, there were statements from other OPEC members saying that they were all part of it. There is a consensus between the OPEC members, and that led to some support in prices. But then again, there are excess supply, oversupply into the markets. The U.S. weekly inventory data numbers would be released today, and the API numbers already show that there is going to be yet another surge in U.S. inventories, and that seems to be putting pressure onto the prices. But there are reports now coming in from various banks and brokerages indicating that perhaps the worst is over. We have seen momentum selling into the prices. There has been a lot of delta hedging and undershooting happening in crude as a trading investment, and that perhaps seems to be getting done now, and we could see some consolidation, even some gains from here on. Yeah, the Goldman Sachs report last night indicates that $75 barrel as an average price is what they are looking at the first quarter of 2019. So that means that we are perhaps looking at some stopping of the carnage, especially in the crude oil prices. One quick word on the metal space, where we have seen yet another a bit of a decline continue here. The data from China has not been so good. Markets will look out for the winter curbs as the season starts, and that perhaps could be a supportive factor. But when you look at the demand and the inventories, that clearly are on the bearish side.
Okay, Manisha, thank you so much for getting us all those cues. But from the world of commodity, let's move on to the world of derivatives. And Manglam joins us to tell us how the cues look from that space. Manglam, good morning.
Good morning, Anisha. So, we have seen a fair amount of choppiness in the frontline index as well as a lot of individual stocks. And that sort of choppiness is reflective in the flows as well. So, yesterday in the cash markets, the FIIs bought about 277 crores. The domestic institutional investors, they sold most of the things that the FIIs bought, 272 crore worth selling out there. In index futures, the FIIs put in a net buy of 92 crore. There was an equal amount of, again, purchase in both index longs as well as index shorts. So in terms of index options, there was a purchase of about 602 crores. Remember, it is Nifty Bank weekly options expiry, so a lot of the flows were directed towards that as well. So in terms of just the Nifty, we saw some writing at the 10,600 put. That's telling you that maybe lower levels we are finding a fair amount of support. The premium on the 10,600 put stands at around 130 rupees. At the same time, we saw 10,900 call adding some amount of open interest, so maybe some bit of punt buying taking place out there. In terms of the Nifty Bank, the markers are pretty clear. 26,000 on the upside, that is where the maximum calls are built, and 25,700 where the maximum puts are built. In terms of individual stocks, keep an eye out on Jet Airways. There is a fair amount of news flow. The stock is in F&O ban. And then Indigo saw a fair amount of long positions being added, a lot of shorts added on Ashok Leyland, Motherson Sumi, as well as Sun Pharma.
Okay, thanks so much for that, Manglam. Well, on that note, we'll wrap up on Power Breakfast. You stay with us because Bazaar Morning Call comes up next.